All right, traders, George here with the Trading Authority, and I've got some great things to share with you here. What I'm going to show you here is where you will start to move towards if you start applying the things I've been teaching you in the live room. In addition to that, nested within this information are two of the most essential aspects of day trading, two of the key lessons that I talk about all the time, one having to do with belief and vision, the other having to do with the flow of expectancy. Let me give you a breakdown as to what you're looking at here. These are the actual live trades that I put on in the live trading room for the second quarter. I wasn't around for the first 2 weeks of April, so I'm starting this April 16th and we're going to July 3rd. I only run the rooms Tuesdays through Thursdays, so there's no Monday or Friday data. And within that stretch of Tuesdays and Thursdays, there were actually 2 days where I was out. I didn't run the room on those days. So we're talking 33 trading days here, 8:30 to 11 Central, okay? We're talking about futures markets. At a maximum, we're looking at these markets here, oil, gold, the Euro, Mini Russell, and the NASDAQ. But to be fair to my work, I want to qualify that the Euro and NASDAQ, they're not given a full day's treatment. The Euro gets a bit in the morning and then the NASDAQ a bit later in the morning, and that's really just to show you more examples. The gold, oil, and the Mini Russell are the markets that get the full 2.5 hour attention there. One contract across the board here, okay? And why don't I just get to some key numbers, and then I'll move on to show you some even more important information. For the second quarter here, 604 trades, $12,822.50 profit. There's no slippage involved here, but I'm not factoring out commission, so maybe that'll have you hunting around for a broker. Cumulative profit percentage here, 11.69%. All right, that's all 5 of the markets, and really doing the techniques a bit of a disservice by even including the NASDAQ and Euro in there. However, it is affecting the financial aspect here, so I wanted to show it. But what I really want to do is drive you more towards 2 markets, and obviously everyone looks at oil and gold as the go-to, so that's what we'll do. All right, so if we're just looking at oil and gold, we're talking $11,630 in 33 days on 343 trades, and still a great looking growth curve there. Now, that number that's thrown out, 90+%, 90+% of the people watching this video are going to stop right now, and off you go. We can't do anything about that. But here's where everything matters, is what I'm going to talk about from here on out. Belief in vision and the flow of expectancy. Those are the 2 most important aspects in day trading. Belief in vision refers to the fact that we're only trading off of things that we see on the chart. In fact, there's only 3 basic types of setups and signals that drive these results, okay? They're all visually created. That means we have to tune our behavior to respond to them when they fire off. So there's no fundamentals. There's no emotion. There's no pull in a different random chart because you feel like it. There's no mad scientist of charts effect. It's literally trade what you see based on the same array of visuals. So that's the belief in vision. When you've seen it so many times that it becomes subconscious, the follow-through is not hindered by any of your old baggage. And every trader's got old baggage. The assignment that you give to losses, the way you self-deprecate yourself, whatever negative aspect you assign, that has some weight, and you carry that with you until you stop what you're doing and replace it with new repetitions. The new repetitions drive our belief in vision going forward. It's the driver of everything, okay? Keep that in mind. The second aspect is the flow of expectancy. The flow of expectancy is how the model does as you follow that visual process of picking up on the setups and signals. What I've done here for the flow column is I've manually tagged some areas in pockets of better or worse performance in 2 different degrees. So right out of the gate here, I'm going into a drawdown just on my oil and gold trades, but not much. And then I move to a new relative high here, $1,350 of profit, picking up some nice gains here with the bright green zone, and then hitting some decent losses right here. Get a couple more winners, a couple more losers here, not quite as extreme, but it does drive my balance down in terms of gains to 570. So that move from 1350 to 570 is a move that is likely to happen again in the future. One that you have to be prepared for and ready for. If you get cold feet right there and turn around, walk out the door so you can do the same stuff that's been dogging your trading, which would be trading off of fundamentals, changing charts around all the time or letting the emotions get the best of you, then you're going to walk away from the next 3 trades that launch it into a new account high right here. And then a huge push further until it hits a new relative high here. And then from there it actually makes another relative low, a higher low. And then we finally crack through the $2,000 barrier and a nice push through to crack through 3,000. Here comes some decent performance here. That's letting it reside in the $3,000 camp. Some decent performance there, maybe a little bit more on the loss side all of a sudden. Here's some better growth here. Next thing you know, I crack the $4,000 barrier, and on the next trade I crack the $5,000 barrier. Just like that, it goes from doubt, fear, maybe I can do something else to take the pressure off. Maybe I'll move to a better place of pleasure and avoid what I've assigned as pain. It keeps you out of the flow of expectancy here. And just to keep this process going, not long after, I crack over the $6,000 barrier. Some more significant losses here and here, but not enough to keep this from happening. New account high, cracks the $7,000 barrier. That's for profit within our 33-day window here, folks. And then look at this. Great run of winners here, cracks it over 8,000, followed by some losses, starts to equalize a bit. Next thing you know, here comes some more losses. That draws me down to 76.40 from a high here of 83.80. Another drawdown to watch for. And then a little push further, I crack 9,000, 10,000, 11,000, and then to the end of this period here, it's at 11,630. So 2 important aspects. Critical, the belief in the visual process. What are the setups and signals that you're following? How do you craft them into a rule set? Have you investigated that setup and signal? Have you sim traded that setup and signal? If not, then you're moving away from the work. The traders that have done that have a huge advantage. They're in a very elite camp because most traders just won't have the discipline to do that. It's too much like work. Looking at these trades here, this has an average of $33.90 per trade. Gain, it works out to about just over 10 trades a day, a real nice clip of over $352 gain per day. Okay. Now, there's no Mondays or Fridays in there. If I look at this average and apply it to the 2.5 hours I'm trading here for the Mondays and Fridays that I missed within this zone, we can do a little projection, and it is a projection. Those 23 days at this clip would pull in another $8,152 on 239 trades essentially. As a projection, that's right on par with everything that's happened over these 343 trades, live trades, which is a huge sample. Okay, it could be better than this, but it could also be worse. The other aspect is that it pulls in more trades overall to the equation here, which are things that you have to manage. If you have nothing else to do, then you might be able to pull that off. If you have to manage other accounts like I do, maybe that starts to pull you away from other duties. So that's another aspect that you have to keep on top of, is the number of trades and how it impacts your behaviors in the market. What you should take away from this, though, is how powerful the belief in vision is. When you have a model and a setup and signal, and you start to own that repetition and execute it without fail, that's what's possible. The flow of expectancy means that when you start to trade live, you really don't know where you're going to jump into this vertical column here. If you jump in right here, you're walking right into a drawdown. If you start trading at margin plus a couple $100, you'll be under margin here in just a couple of trades, meaning you'd have to lay off one of the markets. Which means that if you're laying off a gold, and gold happens to be the winner here, you might be taking on a few more losses. Maybe that pulls you below to the point where you can trade oil, and the next thing you know, you've got to raise more capital to start trading again. You don't want to go there. You want to make sure you're properly funded so that you can jump into the flow of expectancy here and be ready for a drawdown, and obviously we'll welcome a nice string of winners right out of the gate. But the reality is we don't know where we will be in this flow when we're ready to start trading live. Do yourself the service of getting ready by doing your investigative work and your sim trading and funding your account accordingly before you go live, and you'll have a much higher probability of surviving in the market. Alright, that'll do it for this update here for the second quarter. And to carry on with this, we'll see you in the live room tomorrow.